Hello world, welcome to Farm the Market. On the Stock Trading Journal series, I share with you some of my trades. I do not claim to have the quote-unquote epic strategy that beats the market every time. I just hope it's a good exercise for me, where I get to analyze some of my trades in detail by explaining them to you. And hopefully for you, by looking step by step at examples of real trades, you might find interesting some of the techniques or adjustments I use. And this might help you in your journey to develop your own trading skills. This time we will take a look into a trade on DBC. Let's get started. Given the recent boom in commodities, I have been trading DBC a lot lately. If this is your first time watching, you can find previous videos about DBC in the Stock Trading Journal series playlist. This is an example of a very simple and short-lived trade, but I thought it was worth sharing given it covers one of the most important aspects of trading, respecting your stop loss. Also, I wanted to share a losing trade. I don't want to give the impression that everything I trade is profitable. Of course it's not. On March 8th, I closed my last position on DBC. I had been riding the 10-day moving average for a while, but it got really extended. The plan was to wait for a retest of the 10-day moving average to analyze opening a new position. Well, I didn't have to wait for long. The very next day, DBC gapped down, and at one point it was almost 12% down. Towards the session close, the price went back up above the 10-day moving average, and I decided to open half of the position. Although the 10-day moving average will be the stop loss, I didn't place an actual stop loss order. Since the move had been very big that day, I wanted to give the trade a little wiggle room. I will just be following the 10-day moving average closely. On the next day, DBC had another red day with a relatively wide trading range of almost 4%. Towards the end of the session, it's clear it will close below the 10-day moving average. So, naturally, I exit the trade, right? Well, I didn't. I decided it needed more time. After all, it was still very close to the 10-day moving average. On March 11th, DBC has a green day. During the session, at one point it was above the 10-day moving average, so I decided to open the second half of the position. However, DBC closes again below the 10-day moving average. March 14th. Today DBC gaps down. At some point during the day, the drop goes beyond 3% versus my average entry price. Under these circumstances, I decided to close the whole position and take the loss. It wasn't a terrible trade, but clearly I took a couple of bad decisions that ended up costing me. First, I should have just exited the position on March 10th. I mentioned the 10-day moving average like 50 times in the video. It was clearly the reference for the stop loss. But the truth is, I decided to use it only when it suited my quote-unquote winning view. You must draw the line somewhere, and that was the line for this trade. I didn't handle that well. I think I had still fresh in my mind the last couple of trades on DBC, and since they had been successful, I wanted to be more forgiving. Every position must be analyzed on its own merits and circumstances. The second mistake was increasing the position. I was patient when it came to not closing the position, but I decided to be impatient when it came to increasing it. On March 11th, I should have waited near the close of the session to confirm if DBC was going to close above the 10-day moving average. Without that second trade, the notional amount would have been less, and when I actually exited the position on March 14, the damage would have been reduced. In percentage terms, the loss would have been pretty much the same, but in dollar terms it would have been about half. Again, not terrible mistakes, but there's definitely room for improvement. Until next time. I hope you found this video interesting. Please remember to like and subscribe. Thanks for your time.